Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Good to be here with you guys. Juan, Kevin, Theo, Ziad. We just got the release of import prices in the United States. Just want to draw your attention to the release. Slightly weaker than expected month on month. If you strip out petrol, comes out at negative 0.2%. Price index coming out right in line with expectations at 1.8. Initial jobless claims also slightly better than expected. Lower print from 255 to 247. Slight upward revisions. That's going to be a wash. And the data is unlikely to be anything major, guys. I just wanted to bring it to your attention. Theo says, good morning, people got jobs. Yeah, I mean, the employment picture in the United States as it stands, if you just take a look at the headline figures, actually looks pretty good, Theo. And we've talked about this, especially on the back of non-farm payrolls last month. The one key thing that you want to always keep into account, guys, is while the numbers do look good, and I'm going to continue to hammer this, the labor force participation rate still is at levels that we were back at in the 1980s. Okay, so while yes, of the people in the labor force, a higher percentage of them are working, 100%. Unemployment's at a multi-year low. The broader health of the labor markets, by taking into account the entire labor force participation as a ratio of the actual population, is still pretty weak. So I think that's one of the things that the Fed has continued to hammer on. That and a little bit slower of a uptake as far as inflation still continues to be the concern. That said, a quick look at Fed Fund Futures still has us right where we left off. Okay, so markets are really not pricing anything major as far as interest rate hikes until June. That's where we were to start the year. It's where we continue to be. So I don't think, again, like any major data prints are going to shift interest rate expectations as they stand right now. But a quick recap there of the data this morning. So we've got a lot to cover today on the list for today. Obviously, the dollar index, we'll cover that real quick. Sterling, Kiwi, dollar yen, Aussie Kiwi still holding resistance. It closed below it yesterday. We talked about it in the report. We're going to look into setups that we covered earlier in the week. Aussie dollar, dollar CAD, euro pound, euro yen, finally making that move lower. I want to just touch base on Aussie dollar, on euro Aussie, excuse me, which also broke support. Copper, gold, and crude always on the menu. And that's my list for today. So if you didn't hear a pair that you're interested in, please feel free to throw it on the message board. Juan, Euro Aussie again. I'm just keeping an eye on it, Juan. We got to continue to track it. Juan wants to take a look at Euro Key, okay, and Sterling Key. British pound, New Zealand dollar. Okay, added. Gotcha. No worries, Juan. Pete, Euro dollar. I'm still not a fan of it, man, but I'll bring it up. I haven't liked euro dollar for some time now, but guess what? That 104.66 level that we were talking about, Eileen, or if you're in the room, was actually a perfect entry, right? You got a little bounce off that for a while. We'll check out euro dollar. Okay. And any other questions, always feel free to throw it on the message board. Okay. Let's jump right in. Here's the dollar index looks like to start off this session. I do just want to bring your attention to yesterday's not yesterday, the day before. Here's what we were looking at with the dollar index, and it was pretty critical, guys. Remember, we cited a downside bias. Basically, the broader invalidation level still was held at 103.22, the high day close, the 1618 extension, and basically major resistance that converges on near-term slope. You got to run. Obviously, Trump was speaking. You got this massive dollar rally, which promptly reversed, just ahead of that 103 level. It basically reversed off 103. The 618 came in at 102.86. It overshot it by a little bit and reversed sharply. Don't blame me if you got a little bit timid, didn't want to play that, but the break back below the monthly, weekly open really solidified the reversal trade. That's the kind of fake out exhaustion, classic exhaustion move that you look for. So as we noted, basically the previous session, here's what it looked like on the day. If we close below near-term support and specifically 101.80, we're going to continue to favor the downside. And that's what we talked about in the webinar. 101.80 is the longer dated 618 retracement of the decline. It's the bottom of this key support range, former resistance range into 102.05. And certainly on that rally, while we spiked, like I said, much higher, we missed that 103 level and we closed well below that 101.80. I wouldn't want to say well below, but the close yesterday was 101.73. So just on that account, and this is why we always say the closes are so paramount. Um, you basically came in today looking for continued dollar weakness. Now, it so happens that the decline has taken out the downside targets that we talked about yesterday. Remember, critical support at 101.11 and 100 specifically spot 73. That's the exact low. Excuse me, it's 100 spot 72 is the exact low. So we overshot it by a pip. Long story short, this is basically the swing low that you made for June, specifically on the December, excuse me, on the 14th here. Getting a little overexcited. And a basic parallel that we've been following for months. A parallel of slope support, extended off the highs from, what is that, April? Resistance, break, support, perfect confluence, and literally caught the low. A little bit ahead of schedule as far as the near-term slope is concerned. So here's what we look like on the intraday chart now. Okay, so this is the slope that we reviewed here yesterday in the webinar. Again, you can see that 618 at 102.86 literally almost caught the exact high. We overshot it by a little bit on that massive rally yesterday. And then here's the reversal, taking you back below the weekly open, back below the monthly open, okay? And certainly those swing highs, that puts you bearish. Now, you didn't get much of opportunity to get in, but again, as the index is concerned, guys, a nice broader gauge. I don't even trade this here stateside unless you have a futures account, but certainly a nice move here. So the reason I'm concerned about favoring dollar short exposure heading into the U.S. trade session at this point is because we've initially started to respond to this 100 spot 73. Near-term key support, okay? There's so many examples today, guys, that we're going to go over. If you guys remember yesterday, we were talking about, well, look, if this is a break, particularly in the Aussie, we were looking at one. In dollar yen, we were looking at a break of support. If the break of these critical regions is legit, the market should run. I don't want to see market mosey on through resistance or support, right? It should be punt up pressure, 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 pop. Okay, you run on those stops and the market runs. So we'll go over a couple of setups like that, but that's where we are now in the index, for the US dollar index rather. This is that level. If we break below this, I don't think we're going to see something like this, right? We're going to see a bailout of long exposure. So just keep that in mind, that level 100 spot 73, a really nice slope that has offered some very nice pivots in price over the last year or so. It will continue to favor the downside. Again, near-term bearish invalidation. Now you want to drop it down to that high. The monthly open, the weekly open, the median line with key support still at 100 spot 73. Any questions on the dollar index? Okay, we ran to that 618. First target's out, second target's out. Be cautious on any short exposure while above 173. Now, it's important to keep in mind today is loaded with Fed speakers. Here's what the schedule looks like. If you want to take a snapshot of the screen, guys, you got Fed's Harker, which is basically, he's on tap right now speaking. You got Evans coming up. You have Lockhart, Bullard. He was speaking on CNBC earlier this morning. He'll be up again. Kaplan at 13:45. And then Yellen, I don't really think that's going to be a major market mover, guys. She's addressing a town hall with educators. It's going to be more based on economic theory, more so than the direction of monetary policy. So I don't think Yellen today is going to be a major market mover. And then you have Harker again on tap tomorrow. So keep in mind during these time frames, it's not a trade, but if you're holding dollar positioning, just be aware. Okay, I hate to get spiked out just because someone came on with some blip on his commentary where the market sees a 30 pip spike and all of a sudden I'm out of the position. So definitely keep an eye on these levels. Theo says, what's the long-term strategy before you see some long exposure if it does break? Theo, let me just restate that. So you're asking me where would I be interested in reinitiating the long trade? The broader long trade? Is that what you're saying? Where would I want to get long for the dollar index rally, basically? Yeah, broad long term. Okay. So again, I don't really trade that way, but here's what I'm looking at. This is the daily chart. You can envision a scenario. Let me take a step back. If this is, first of all, let me scope this out real quick. Bear with me one moment. Okay, watch 100 spot 43 actually. 2 equal legs down. That might give you a blip too. And the 1618 comes in here. Let me just move that. Okay. Broadly speaking, on a trade like this is a critical pivot. So Theo, I have no way of knowing if this is going to be the concerted low or if this is a larger reversal in trade. All I can tell you is that if we do clear sub 100 spot 43, I'd be looking for a run back into the yearly open from last year. You have the 1618 at 98.87. You have the 100-day moving average, okay, which has offered some decent pivots in price over the years. You've got the 2016 open. Basic trendline resistance, I don't want to really stress this, but a very faint trendline resistance off last year's high and the high that we made back in October. That converges on that region. And then you have slope support. A dip into here is where I'd start to look for repositioning for a broader continuation of the broader uptrend. Either that, Theo, or if this does end up being the high, a break and a retest of this formation would be the signal for resumption of the broader uptrend. Do both of those scenarios make sense? What we're doing right now is we're trying to gauge whether this is going to be a larger reversal or just a near-term correction. A near-term correction, we shouldn't see anything sub spot 100 spot 43. Okay, a simple ABC type of wave pattern, you're looking at 2 equal legs down. That should be sort of the severity of it. You can see an overshoot of these median lines. Remember, it's just price action never happens in a vacuum. So I can see a scenario where things get messy, this kind of pulls up, and then you see a rebound here. The question is, on the recovery, as long as you're in this formation, you got to continue to respect the downside. It's the break back above and retest of support that would have me looking for longs, or if we make it back down into this key region, former swing highs, former extensions, yearly opens, trend lines, moving averages, the works, right? That would be an area of which I'd start to look for possible resumption. He says, yep, thanks, you got it. You got it. So 100 spot 73, watch that as key support in the dollar index heading into the close of the week. Obviously, tomorrow we do have retail sales data out of the United States as well. A quick recap of what we're looking for there. Retail sales are expected to come out for December, looking for a print of 0.7%. University of Michigan sentiment expected to uptick to 98.2. That would be a pretty, or 98.5, excuse me. That would be a pretty strong print. 98.5, the last time we saw that. Wow, we're going to have to go back a few years. Huh. You got to go back to 2004 to see a print of 98.5 or higher. Okay, and obviously since the Trump rally has started, we've getting all these business sentiment, consumer sentiment, production sentiment figures all continuing to suggest a big uptick in confidence. So definitely something to keep in mind on tomorrow. I mean, typically University of Michigan is a fairly important print you want to pay attention to, but I think so even more now, because the markets are looking for validation that the rally that we're seeing is true, that in fact confidence is sort of taking a little bit more of a deeper root across the breadth of the economy. And if we do see consumer confidence tomorrow beat or come in at that, what is that, 13, 14-year high, it's going to be pretty important. It's going to be pretty important. So keep an eye on that tomorrow morning at 8:30 Eastern. All right, dollar index, number one. Number two, let's jump into yesterday's updates. First up on tap is British pound. Here's what the daily chart looks like. And I tried to give you guys a little bit of a prep here. I am never going to be the one to get really strict on trying to call a turn in price, but recognizing the conditions of when the market is vulnerable for that, that's what we do. That's our job. And I just wanted to highlight that yesterday across all three time frames, the daily, the 240-minute, and the hourly, all were suggesting that there was some serious radical divergence into those lows. The reaction that we got off of support yesterday was also very hard to ignore. and that's this level right here. Typically, you don't really see this retracement really used by too many traders. It's kind of an underground retracement that not many people use, but I can't tell you how many times, specifically on longer term charts, I haven't seen much success using an 88.6 retracement on intraday. But these longer term charts, they can oftentimes catch some crazy lows, just like it did here. 88.6 retracement, by the way, just the square root of 78.6 is another derivation of the fib ratio, and it comes almost a perfect tag with this same median line that we've been using since September. Not a damn thing has changed. We've been still trading or watching this formation. It got really ugly at the lows, but the lower parallel did offer very nice pivots. Once we broke in October, came down, tested that line as resistance, tested that line as resistance. When it broke, what do we want to see? That extended rally. And that's exactly what we got. A little messy around the median line. Upper parallel caught the highs. And if you take a parallel off the actual stretch highs, it also caught even the swing highs. Okay, as you can see right here. And on the way down, perfect tag of the median line alongside that 88.6 retracement. Okay, that's not just why we got bullish, but also very nice daily divergence. Price action making a lower low. Juan, I got you, my man. No worries. I'll have the archive up and I'll have Euro Kiwi covered for you. I got it on the list. But you see the price action making a lower low on a closed basis, the oscillator making a higher low. Okay, and now it works out that this resistance trigger is just basically in line with this region. If we clear the 2016 low day close, 2433 into 2406 is the resistance region. If we clear that, you might be up for a little bit bigger of a play here in sterling. As it stands, you're simply bouncing within the confines of a downtrend. That's the level we need to play to suggest that some sort of reversal is underway. Keep in mind, why I'm so excited about this setup now is not just because of the reaction we got yesterday, but also it set a very simple monthly opening range right below resistance, right above slope support. I mean, you can't ask for a better setup like that. And while we haven't really, personally me, I haven't really taken any trades on the pound yet, this conviction break will certainly be something I think that will offer some great opportunities. Whether it's on either side, I don't know. But all I do know is that the near-term risk is for this thing to stretch higher into 24.33, that low day close. Okay, so a little verification here, a little bit just to bring up some factors of why the trade looks vulnerable for a rebound or why it did yesterday. Again, here's what the daily chart looked like yesterday as we came right into that key level and rebounded off. Not only did we rebound off, but we closed higher on the session. Okay, here's what the 240-minute chart looked like. Again, divergence. Here's what it looks like on the live chart. Price action making a series of lower lows, lower low, lower low. Oscillators making higher lows. Really nice touch. A little bit ahead of schedule, but nonetheless. First initial topside resistance that we noted from yesterday was what? 2337. 2406 into 33. So keep in mind, 2337 is going to be the monthly open, okay? Also the yearly open at this point, obviously. The 618 we just hit. There's that monthly open, and there's that key resistance level. Again, the breakout region, the opening range high for the month, it's loaded at 24 to 24.33. At this point, I'd be looking for some near-term support. Heading into the U.S. session, Mike, what's the game plan? Well, if we get a decent pullback, I'm looking to get long, okay? So if we get a pullback into, I want to say the initial region of interest is 122.30, okay? Basically, if we get a pullback sort of back towards that median line, you can see it a little clear on the daily chart. It might be a decent position, especially those swing lows that we made last week. I don't want to get too low on it because if it does start to sink too much deeper below that, I'm going to kind of want to bail out of it. But I'd be looking for a pullback here to offer some possibility to get back on a long side position for sterling. Also, one thing I do want to note is that once we do get a near-term high, then we have conviction of some sort of structure, and that's when I really like to operate on it. Until we do, we're basically recognizing that there's waning momentum. You reacted to a decent technical level, and we're just looking for some follow through here. So once we do get some structure, I don't know. I'm just going to slap this on here just to show you guys sort of what I'm thinking. If we do get sort of an initial break or a bounce, some structure, we'll get more validation, make it through the opening range highs for the week, which we're testing right now. Again, I'd be looking for some structure on the advance, maybe not that slope. Might end up being something a little bit wider, but you get the picture. Any questions on British pound? Again, here's what the intraday chart looked like yesterday. The pullback found support at 121.60, 121.61. Okay, that's number 2, British pound. I got to pick up the pace here a little bit. Let's go to Kiwi dollar was next up from yesterday. Here's what Kiwi looks like, and this thing is just insanely clean. Doesn't want to do anything outside the realm of this slope. So I adjusted this slope just a bit, guys, to better encompass what's been happening in price action. And basically, ever since we broke above 69.55, 69.50, Pujan, I think you were asking about this for the Kiwi. Ever since we broke above that, really that's been the key support that you really needed to get through to get the continuation of the downside. Now, the rebound that you're seeing here has stretched into an interesting level of resistance. Here's what it looked like yesterday on the 240-minute chart. You had to stay constructive while above the 70 handle. You're looking for key resistance into 71, 71.10, with really this region being the critical area of resistance. Guess what? We came right into this today, and that's what we're trading right now. Here's what Kiwi dollar looks like. All right? It doesn't get much cleaner than that. And basically, that's why, even though I was saying yesterday, technically, this break constitutes a break of what, guys? Simple break of the weekly opening range high, objectively, irrespective of what Michael Boutros says, Jamie Setley says, SB, whoever you're reading. Objectively, that's a near-term price break to the upside. Well, it followed through. Initial targets at 70 at the April high, 70.54. This target I didn't want to put on there because they're just stacking them too close, but this actually constituted a 1618 extension, now obsolete. Actually, I'll leave that on there for now. I'll show you something cool. And key resistance right here at that confluence, just higher. Basically, you're looking at 71.25. Oh, that's what I put yesterday, 71.25. Okay, and that's where we're trading right now. So at this point, a little bit more hesitant to favor long side. I do think that the rally is vulnerable. Momentum's in overbought condition, though, so you don't want to start fading this until you see that start to fade a little more. But I'll be looking for exhaustion heading into the U.S. Open. If we get below 775, which on the daily chart now is basically a little bit lower than where that 200-day moving average is. But what I wanted to say and what I noted yesterday, guys, is this rally looks awfully reminiscent to what we saw here. And on those final 3-day stretch, the thing popped all the way up into the 618, then collapsed. So I want to see today's close. I think you can travel maybe even for a spike of that 100-day moving average again, which has sort of been a magnet for prices over the last couple of months. But long story short, today's close will be paramount. If we close above that median line, that's a breakout. You're looking for a rally into that 100-day. You're looking at a rally into that parallel dating off to the highs that you made back in August. That takes you into like basically 72, 71.90. So the immediate risk is for a pullback lower. It looks like on the daily like it broke, but it's just really the scale. Again, if you take it here, it looks much cleaner. On the 240-minute, you're right at resistance. Right at resistance. Bring this a little bit closer into the 2-hour. Again, obviously had a little trigger here that gave out on the rally. And here's the 1-hour. Okay, looking for resistance as we speak in Kiwi dollar. Again, if we get a pullback, the reason I wanted to leave that 75 level is because it actually converges very nicely on the median line today. So watch that right there. And at this point, I'm going to adjust some of these levels. I'm going to get rid of that April high. And I'm even going to get rid of 70, 70, 35 here. I'm going to go ahead and mark the highs, the opening range high for the week, especially as we've already pivoted off it as support. And it converges, okay, on that lower pair, on that 50 line rather, down here. This would be bearish invalidation for me near term, just on account of where we are in price. Or bullish invalidation, excuse me. If we break below this, for me, I think that would be a good mark that we're reversing back. Keep in mind, this is one of those regions, just like we talked about in dollar index, just like we talked about pound. If this pops, look for the rally to really shoot. Today's close will be paramount, whether we close above or below that region. Looking lower while below. Questions on Kiwi dollar? Going once, going twice. Dollar yen looks like this. So, the dollar yen. Here's what dollar yen did yesterday. Wicked, wicked, wicked rally. Remember, the near-term focus, as we had noted, remains lower while below 117, okay, which was the monthly open. Yesterday's high came just within striking distance, 116.87, before reversing sharply. Again, it closed just below 115.50, and we even talked about this. We said about in the webinar, if we close below 115.50, that's the mark of continuation, okay? Because we've been trying to close below this level for a while. It converges on the median line for the daily chart of the broader function we've been following, or the broader formation we've been following off the lows. And if we close below it, you got to continue to favor the downside. Not only did we close below it, guys, but today's candle high is right there. We even came back and tested as resistance before moving lower, taking out targets into the 100% extension. And that's exactly 113.99, 114.14, or 114.15 was the top of that range, which also is a near-term target I'll show you on the intraday charts. 236 retracement, basic, basic, basic. So nice cushion zone here of support. Again, let me bring this out to a 2-hour. And here's what it looked like yesterday on the scalp. Okay, so we were sitting on that region. We closed, like I said, just below the 115.50 level, and certainly that kept the downside targets in view. Remember, the double top formation measured move, if this is a double top, still gets you a target at 113.47. And the reason I'm a little bit more hesitant here again is because we've completed 2 equal legs off the high. If this is correction, that's sort of where you want to look for a near-term rebound. You want to stay bearish at this point. We're going to lower our bearish invalidation level to that median line confluence. Okay, if the opening range for the U.S. trade session pops higher, okay, momentum is already recovered from oversold conditions, so I'm not chasing it here. But if it does pop higher, guys, a quick retracement might also yield some confluence regions. Let's see what this looks like real quick. 50 lines up with the level we're looking at. 38.2 comes in just there. 236. It's not bad, actually. I'm just going to leave this here for now. We'll move this target. 236 comes right in line with the lower parallel, so that's going to be near-term resistance at this point. Bearish invalidation, 115.60. As long as we hold below 115, 115.60, you're looking for a rally to sell. Break lower, targets 113.47 and the lower parallel. In the broader term, that's this. Okay, this line right here, which offered some really nice pivots back at the advance of last year. Break, it's the origin of the advance or the breakout zone. That'd be somewhere in a range of 112.40, 112.45. Okay, dollar yen, bear sub 115.60. Look for the break lower for those subsequent downside targets. Have you been through silver, nat gas, and copper? No, Conwell, we haven't hit any commodities yet. It's on the list. Okay, that is dollar yen. Any questions on dollar yen? Last but not least from yesterday was an update on Aussie Key. And Aussie Key still holding on for dear life. Here's what Aussie Key looks like. And we'll go over the Aussie and Kiwi respectively. We already did the Kiwi. We'll do the Aussie respectively as well. Remember that key region we highlighted early in the week, 105.60. Our last target, I believe, was 105.47. This is the 50% retracement, the longer dated upper median line parallel of this formation that we've been in off the highs. Okay, and that multi-year origin slope off the 2014 January low right there as well. We're kind of stuck in this little pocket. That was the ideal top or the ideal targeted range of resistance, as we noted the rebound earlier in the month, and we're there, guys. We're there. Now, I guess there's nothing to say here about the intraday chart. Here's what the intraday chart looks like. You came right into that region. Momentum completely flattened out below 70 as price action continued to press new highs. And the long side's at risk below 105.60. Now, the way you want to play this is look for this break to validate the reversal. If we move back below 105.18, which is the initial weekly opening range high, the 50 line, and basic trendline support, if we break below that, look to play these downside targets. First, right into the median line. The 50% retracement comes in just below the weekly open and just below the weekly opening range low. So again, the levels are super clean, which is why I like this setup. On a topside breach, if Kiwi gives out or Aussie just continues to rip, you're basically looking for 106.08 and 106.60 into 107. Is that right? 106.75, excuse me, this huge region of resistance as well. Favored move is for you to see a little bit more of an exhaustion correction lower. Inevitably, we do want to buy Aussie Kiwi longer term. Immediate upside bias is at risk sub 105.60. Okay, so again, it's been kind of a lackluster trade so far ever since that rip that we had at the weekly opening range early, or of the initial weekly opening range high, I should say. But now the focus is on this key range between 105.20 basically and 105.60. Favored move is for a pullback before you start to resume higher. That's Aussie Kiwi, number 5. Okay, so now that we've seen this, here's something I want to go over I think is very interesting, and that's Aussie dollar. If you guys remember, since the start of the week, I've been looking to play Aussie shorts off of this near-term resistance. I did eat another break-even stop. Oddly enough, all the shorts that we took earlier in the week did end up being slight profits and break-even, so we haven't taken any losses on the advance. But what we were talking about yesterday and what we were talking about earlier in the webinar, this is a perfect personification of it. When you come into this key confluence regions, you don't want to see dilly-dally. You don't want to see a slow mutter higher. You want to see this. And this type of price action is what gives you the conviction that, in fact, we're working with the proper slope, that we've highlighted the proper significant technical level, and that the break indeed has followed through. Okay. Same thing with Aussie, though. Okay. We broke a near-term resistance. The rally has been really, really strong, but now we're already near the next near-term resistance. And basically, that's that 50 line for the current operative slope. Here's what the daily chart looks like. You see this? This is the level we were talking about forever. And this is the kind of reaction you want to see if the breakout is legit. We took out 104.70 yesterday on the rally before pulling back. And here's today. My last target that I had noted on the report, guys, was 75. And that's this confluence. See the 100-day and 200-day moving averages converge right on that parallel. If we close below it, the risk is for a near-term pullback. Do I want to play the pullback via Aussie per se? I don't know on this kind of breakout. I just wanted to highlight that if you're holding long exposure, you kind of want to tame that here, at least near term. Here's the near-term targets. And at this point, this retracement is null and void. Now, if this does give us a signal in early U.S. trade to get one more exhaustion high, we get a chance to get a little bit of a short move off it. Here's where I'd start to look for some support, possible re-entries. Again, I don't know that this is going to be a high. I'm just doing this as an example for you guys. I want to see where that 38.2 comes in. A little bit lower than where I'd want it, but I'd be right here. This would be the near-term bullish invalidation level, also an area of interest for possible stretch higher on that. And let's scratch that 38.2 at this point, and that 50 will leave. There we go. So here's the amended levels I'd be working with heading into the U.S. trade session, guys. If you want to take a snapshot of this, just to clean things up on the new stretch higher from yesterday's update, here's what it looked like. And again, that's Aussie key. Here's what Aussie dollar looked like earlier in the week. Again, there's that critical region that gave out. So we've already taken out that 50% retracement, and we're right up into the 618. 75.42 is what, I'm sorry, we're right into that median line. 75.42 would be the next level up, but watch that near-term slope, which could cap this advance. Okay, any questions on Aussie dollar? That's number 6. Dollar CAD, number 7, the loonie. Coming into an interesting area of support. That is defined by 130.15, 130.24. Again, also a trade setup that we've been following. Here's what dollar CAD looked like earlier in the week. Okay, I'm just going to bring it right into the 4-hour real quick. Here's what we were looking at. That's 31.90 key support. Same thing we were looking at with the Aussie, same thing with dollar yen, same thing with the dollar index. The breaks of these confluence regions, you want to see the run. That's exactly what you got. 131.40, 130.78. There's that key support, 130.15 to 130.24. We turned just ahead of it. The actual low here was 130.29. So be wary, okay? Here's the median line structure that we had added. Do you remember this, guy? Specifically, I was saying I don't want to get too excited yet. I'm starting to get excited, okay? This is, bringing the 4-hour. The median line off, excuse me, the formation off the highs from the 28th of October, the December low and the December high. The 50 line caught that low perfectly, turned right ahead of the median line, and literally the lower parallel. Really nice, perfect rebound. This is still key support, and at this point, that's still sort of the level you need to beat to get the next leg lower, targeting 129.50. At this point, I actually do like some long exposure. If we get a pullback here into the U.S. trade session, get another opportunity to try to take it along against that 30.15 level, I'd like to see a rebound back towards former structural support. Right around there. Take that new retracement. And if we do that right, there it is. 236 comes in right here. It's a basic initial fib. And I'll dump this retracement at this point. So there's some new amended levels. Again, near-term resistance and bearish invalidation, 131.65, let's call it, into the opening range low, or let's call it last week's low, 131.75, 131.65. A break below 130.15 is really needed to solidify the next leg lower. No change as far as the broader outlook is concerned. If we hold below 31.64, this is just a break of support. We're looking for the zoom in retest and another leg lower. But initially, I do think you can see a bounce here. Here's what the daily chart looks like. Doesn't get much cleaner than that. Questions on, excuse me, questions on dollar CAD. Keep in mind, we do have the BOC interest rate decision on tap next week. So we'll see if that can't shake things up on some of these CAD crosses. That's dollar CAD number 7. A quick run around on euro pairs. Again, let's just touch base real quick on euro pound. Euro yen also continuing to finally make its move. So first things first, here's what euro pound looks like. All right, we talked about this earlier in the week. It came off a pretty big region of resistance. I don't want to beat this setup up again. We're basically still looking for a break of the initial weekly opening range low at risk sub 87.40. Broader bearish bearish invalidation is still up at 88.15, 88.22. Listen, even if this breaks and makes a spike into this region, that's still pretty big. It's a 2013 high. It's a 618 retracement. It's the upper parallel here of the median line parallel extending off the highs, the same slope. Okay, this is a 3-point touch, 4-point touch now, so it gives validation to that slope, converges on it. I wouldn't put it past this thing to make a stretch here before reversing, but the broader line is I'm looking for a move lower. And to validate that, I do need a break of the initial weekly opening range. Here's what it looks like on the intraday chart. Okay, so it's kind of just sitting there, right? No change to any of the levels that we've been following since earlier in the week. They're all basically right where we left them. So we're just sitting on this region right here. Any questions on euro pound? Close below 86.64 is really what we need to see. Downside target to 85.98. Key support 85.50, also an area of interest for possible long entries. Bearish invalidation or the breakout zone or the resumption trade would only happen with a break above 88.22. That is euro pound number 8. Moving right along, euro yen, similar scenario in that you're just butting up against resistance on euro yen. Obviously, dollar yen is giving us a little bit more confidence, at least in the yen crosses, but you're not really seeing that same type of magnitude yen strength versus the crosses per se. Here's euro yen. I don't even want to stress the intraday chart. It's really all about this. You've seen this chart on multiple reports. We still haven't gotten the close. You know, we highlighted that this could be a consolidation, a little bit of capitulation here for Aussie or euro yen, excuse me, just below resistance at 123.47, which again is a key 618 retracement, sort of this brick ceiling we've been unable to push through. So here's the median line or the 50 line, which has been a very nice slope as well. If we get through this, excuse me, this is the 618 line, not the 50 line. So 618 of that bottom range, caught the low perfectly. Trying to get through it on a closed base has been unable. But if we do finally close below the monthly opening range, which is right here at 122, we haven't been able to close sub 122 yet. If we do today, I think you look for the near-term correction to follow through into 120.96, a little bit more of a key region of support down into 119. Broadly, this is an uptrend, okay? Longer term, we'd look to buy it. Near-term risk with a break below or close below the monthly opening range low obviously shifts the near-term focus lower. Any questions on euro yen? Let's see if we can't get this thing finally moving. Again, this is your weekly, monthly opening range lows right here. Been unable to make any closes below it. Any questions on euro yen? Number 9. Okay, let's jump into the commodity block. We'll go through copper, gold, crude, and then we'll jump into some of those euro crosses I've been getting questions on. Obviously, we want to cover for Juan euro key and sterling key. And Pete, if we have time, we'll get euro dollar in there as well. First things first, copper. You guys have seen this chart yesterday. We went over it in the webinars. I don't really like the daily chart, but the intraday chart is at near-term resistance by my gauge. The one thing I want to note is that if you take, let's see if I can do this real quick, a parallel of that same slope, which isn't the easiest thing to do. Okay, take that same parallel and extend it off the highs. Look at this, right? You're basically right there. Boom. So you're at resistance, Conwall and copper. If this breaks, what do we always say? The breach of resistance within the confines of an uptrend or an up pitchfork or an up channel, those can be the steepest parts of the rally. And although this has already seen a pretty strong rally, a breach above this region, in my opinion, would further sort of give you a blow-off rally. I don't, that's not my base case scenario. I'm actually not a fan of that right now being the case, but just know that if we do clear it, you're probably going to see a pretty radical run out. So just keep that in mind. At this point, now that we've sort of pushed into this region, I don't want to stress this 618 retracement. So I'm going to go ahead and just get rid of that for now, and the 50 for that matter. Now we'll push this out into a 786. Ditch that. That's sort of your key region of support right now. This is going to be your near-term bullish invalidation level. That's 256, 257. And a breach higher, if you do get it, this is what you're looking for, is 274. I think the immediate risk, Conwall, on this is for a pullback lower. Now, look, one thing I want to note is this. You're not getting divergence in momentum. In fact, momentum did make a new high with that new high. And that type of candle on a 4-hour chart is not very bearish. Let's see what this looks like closer term. 1 hour. Okay, here you're getting divergence, but in overbought condition. So divergence above 70, a weak signal. Let's see what this looks like on the hourly. Same deal here. Here's the 30. Yeah, it looks like it could be getting some exhaustion near term, in my humble opinion, on this Conwall. So just watch resistance into this parallel, okay, which is the same slope of the formation that we added last week. So it continues to hold pretty well. I'd be looking for some near-term support or a near-term resistance here on a pullback. Initially look for that median line, which actually today converges right on the lows. So that's 260 or so. Bullish invalidation. The only thing that would wipe me out of the broader uptrend would, or the up sort of near-term upside bias would be 256 here. Okay, a little bit bigger the ranges, but you got to stretch them out now that price actions really start to open its wings a little bit, okay? So just keep that in mind. Like I said, near-term support right along that median line. And on this hourly chart, watch that support trigger right there. It's got a couple of nice touches. 1, 2, 3, 4 touch. Not bad. And with the same respect on that, you got a nice resistance trigger as well. Boom. It's only a 2 touch, but something to keep in mind. Okay, that's copper. Number 10, at resistance. Watch that median line. If it ruptures, sayonara, I think you get much, much higher from here. Gold, a very similar scenario in that gold is pressing resistance. It's seeing a little bit more of a clear-cut reaction, though. So this is 1203 into 1200, 1199.55 to be exact, which is the key region of resistance we were talking about for oh so long. I want to bring your attention to the weekly charts that we've been talking about also for gold, which really just sort of easily highlights a little bit clearer what a critical range we're entering right now. And here's what it looks like on the weekly, guys. Former 100% extension of the decline off the highs. Current 50% retracement from the ascent, off the lows of 2015 puts you right here in line with former or a slope line or a median line here extending off the lows from the October 3rd decline. So there's a lot up here. On the weekly chart, it extends into 1210. To be quite frank with you, on the daily chart, I would even extend it to 1218, which would be a basic 38.2 of the near-term decline and also a little bit more precise as far as that median line is concerned. So long story short, look, gold is coming in some interesting areas. We've had a phenomenal rally off of a critical support barrier. The washout's not likely to be orderly. Okay, and I say that because both of the nature of the decline, the nature of the advance, and the type of price action we've seen on the pullbacks, that's pretty strong. You know, this thing just rubber band right higher. Same thing on here last week when we tried to push lower, just rubber band right off that low. Same thing here, right? Right off the lows. So look, near term, this is how you play this. Here's the median line formation we've been following for, I don't know, 2 months now. Okay, almost 2 months. This is the break of the upper parallel. The upper parallel should not be support. That's the way you want to play this. As long as we hold above this support, don't get excited on the short side just yet. In fact, if we break a high here, this would be a validation breach, zoom retest, and bounce. That would sort of be a validation of the break of resistance. So today's price action focus is on this low here. I'd stretch it into the swing highs we made yesterday at 1197, into the high that we made in overnight, 1206. Look for a break of this range near term. If we break the highs, like I said, continuation is sort of on the menu here into that 1218. Watch 1210 from that weekly chart, but 1210, 1218 would be the next upside targets for gold. If we do stretch in 1218, no interest in any type of long exposure at all. I think that's a prime, I think that's a gift if we get that for possible entry for a near-term pullback off that region. There's so much there, guys. The median line for the wider formation here, 38.2, former trendline support. I mean, it's loaded. Okay, let me add this retracement into the intraday chart for you too. There you go. Key support or near-term support, 1182 at this point right here. I'd want to get rid of that 618. It's up here. Questions on gold. Copper was 10, gold was 11, crude oil is number 12. Here's what crude oil looks like. Obviously, it's been on the headlines lately because of all the price action fluctuations that we've been seeing. Near term, I'm looking for exhaustion, and that level remains unchanged from what we talked about yesterday. Basically, as we were moving here yesterday, or as I highlighted, if we break above the median line, or this 50 line rather, I'd be looking for continuation. The broader bearish invalidation level is still here. Okay, we're heading into that region right now. So I'm looking for resistance, possible short entries near 53.68 into 53.80. Again, that's the monthly and weekly opens, which both converge on the upper parallel. Okay, that's the real test here. If this clears, I don't want to do anything with crude. It's in overbought condition yet, so I'm not going to try to fade it both on the 1 hour and the 2 hour, which is entering into overbought condition. But you get the picture. You know, this could simply be a false break, and if it is, a break above here would validate sort of a look back higher. The daily chart continues to highlight that 54.21 is sort of the region to beat for resumption, especially on a close basis. So no change to any levels on crude from yesterday. Again, look for resistance into the monthly/weekly opens. What are the targets on the pullback lower lows than 1120 level? You're talking about gold here, Theo? What are the targets on the pullback? I wouldn't be looking for 1120 unless 1180 breaks. Like I said, this is the near-term support. If we get a pullback into the lower parallels, depending on where you are in time, also you had former slope resistance, which we broke. that converges on that as well as a basic 236. So if we do get a sort of a pullback into this region is where I'd be looking for initial support, Theo. I think if you break below that 1120, oh man, that'd be some pretty big stuff. That'd be some pretty big stuff. Here's what I want to say, Theo. The reaction, and as I said in the quarterly forecast, the reaction and the significance of that key low we rebounded up, I really can't stress that enough. And now that you're seeing almost $100 rally off that, I don't know if I want to target that right now. I think the market, there's been a change in behavior here. I think we need to respect that. So look, if 1182 gives out, sure, you might get a deeper pullback. When that scenario that you're talking about to me, when that would be interesting for me, Theo, is if we do stretch into 1218 and then we break 1182. That would be possibility for a broader continuation of the entire decline. Okay? Zoom and retest of former support as resistance. Then you're looking for a possible continuation. But I wouldn't be looking for a target near 1182 unless we clear this first or break below 1182. I mean, does that make sense? He says, got it. Right on. Okay, gold and crude covered. Silver, are you seeing any exhaustion? Conwall, silver. What's that doing? Well, you're at resistance. I mean, I don't know if it's exhaustion per se, but it's at resistance. You're definitely getting some divergence in price action as you see a series of higher highs in price, higher highs in price, higher highs in price, a series of lower highs. Suggests that indeed near-term momentum may be waning off the highs here. This is a 2-hour chart, keep in mind, just to show you sort of graphically here, the series of lower highs that we're getting. And yeah, I see a confluence resistance region. I wouldn't be too surprised to see a pullback from here too. Same type of deal. Same type of deal. We need to adjust this retracement from yesterday. Remember, we were looking for a move back into the weekly open, and that's going to be our near-term support. You got almost there before whipsawing higher, but you're still holding that median line right off the lows, which has been a very nice pivot. I really like this formation, actually. Thanks for bringing it up again here, Conwell. I'm not sure if I put this together last night or if I showed you this in the webinar, but it looks pretty damn good. I'd be looking for some near-term resistance here, sure. Yeah, absolutely. To mark reversal, okay, he says he's long. Look, any long exposure, I'd only be looking to clean that up as you move into 1695.17. Wouldn't be looking to target anything through this unless we get the break. Okay, so if you're holding a long exposure and you get up here, take that off. Make sure you bring it at least to break even. If you do get the run, great. 1740 is on tap. That's your gift. But I do want to say that it is at risk here. It is at risk here near term for a little bit more of a substantiated pullback. Now that would materialize even more so if the dollar starts to give us a rebound. So keep those things sort of in lock here. Soft support at 1665, but the real major support level would be 1645. Okay. Here's the 1 hour. Oh. Here's a 30-minute. Oops. Okay, U.S. Open is right on tap, guys, so I do need to start getting through these. Any questions on this, Conwell? Does it make sense? He says, thank you, sir. You're more than welcome. Yeah, watch this region, okay? If you get the spike up here, take some off the table, but please bring your stops at least to break even, because if it spills lower, it's likely to be a really sort of steep spill here once you clear that low that we made in overnight. Moving right along, I do want to touch base real quick on Euro Oz and Euro Key. Euro Oz, guys, here's what it looks like on the daily chart. You know, basically the only thing I wanted to highlight is that material break, you know, that we talked about did really see this thing lower on a more aggressive approach. And certainly the spill has now come into and broken below, tested as resistance, this key zone that we were highlighting into 142.12, 142.26. Next downside target, the low day close here, okay, or the low close rather for last month comes in at 141.30. 148, but the 50% retracement comes in a little bit lower at 140.95. That's also the low we made for December. Don't really have any trades on this. Not interested in getting into anything new, but I did want to highlight the fact that we are indeed making a little bit more. Of a run lower here before you start to look for a little bit more of a rebound back to the upside. Okay, so very interesting as far as price action here in Euro Aus, and again, relative price action in Aussie and Euro, something you want to keep into account. Euro Kiwi, this is for one, I believe. Euro Key looks like this. I don't have anything active on it, so let's see what we're doing. Break of the monthly opening range here today. Watch the close. Break of the weekly opening range here earlier. Bearish invalidation for the immediate downside move would be 149.86. I do still want to highlight this target. Nope, I'm lying. That might be much closer now. Ooh, we just tagged that 100% extension. Watch out. 2 equal legs down off the high actually gets you right to where the low we just made. If we break back above 1, bear with me, that's the 618 retracement too. Gosh darn it. Yeah, this is a big, big region. Okay, this is a big, big region. I tell you guys this all the time. My favorite fib confluences, 1618 off the low, 100 off the high, perfect rebound. I do want to highlight near-term resistance for you. I wouldn't put it at the 618, that's for sure. Yeah, it's going to have to be this. Boom, boom. That was today's high. This would be sort of near-term bearish invalidation. Weekly open. Key resistance, also an area of interest for short entries. This is the level to beat. Okay, on the near term, I'm not going to stress this 786 retracement. That's what I'd be looking at near term. Okay, Juan, as far as Euro Key is concerned, looks like a really clean formation in my mind, especially with near-term price action, how we reacted at that median line. So watch, oh, is this actually a nice slope too? Pretty close. I'll leave it on there. 618 line caught the lows exactly. Median line caught the highs exactly just on today's stretch and rebound off support. This is the key region to watch for, okay? Broader focus is still lower sub the weekly open. You need to get sub 149 here, 149.11 to mark continuation, targeting 148.30. Not a bad setup. Very interesting. Euro Key, that was number 13. Sterling Key, just a quick run through. I can't even tell you the last time I looked at this thing, so I don't think we have enough time to get through Sterling Key here. Just note that you're making a tag here, the 50% of the 618 key retracement from the advance off the lows that we made last year. Also a long-term slope line that we've been following, former support, former resistance. A little messy here on the break, but that's also converging on that level. Near term, watch for support at or just below today's lows, basically into the 172 handle. Near-term area of interest here for support on Sterling Key. Let me just take a quick extension off the highs here. This is very interesting levels. Okay, it's not going to be very helpful. What about this decline? Hey, hey, 1618 convergence. 618 off the lows, 1618 off the highs. Ladies and gentlemen, that's a beautiful move. 7,200, watch for near-term support here on sterling key. Okay, and certainly that would support sterling strength and Kiwi weakness. Kiwi dollar standing at resistance. Looks damn good. I like this move. Look for this exhaustion low heading into 72. All right, that's number 14. Finally, Euro for Pete. If you're still in the room, man, I got you. I made a promise. I'm going to keep it. Here's what Euro dollar looks like. Man, 104.60. Eileen, if you're still here, I know you threw it out on the webinar yesterday. That was the perfect entry. Not going to lie to you. I had no interest in Euro. Kind of still don't. But it was a perfect entry. Eileen says, yeah, that was Jamie's level. I know he was expressing regret to me yesterday why we didn't put out that trade for you guys off that region. But, you know, hindsight's always 20/20. And who knew that the reaction that you're going to see to some of the Trump comments were going to be, you know, completely reverted so quickly. So look, the 104.50 level was the level I was looking at. That little bit below where the low was. That was the 618 retracement of the range heading into the open yesterday. We highlighted that as also an area of that lower parallel. Really nice rebound. Technically, this breaks the weekly opening range, but I still don't have the kahunas to follow it through, okay? Because look at the daily chart, guys. You see that slope? Low, support, a little messy, but you couldn't close above it once, and that was today's high already. I don't know. I just don't like the Euro, guys. You know, if I had the conviction, I would be first on board, but I don't. You know, I think this could wash out lower again back into 105 and then ratchet higher. At the same respect, the dollar is just not, you know, catch a must grace here. As the dollar rebounds a little bit, I think that could show you a little bit more of a bounce back to the downside in Euro before it continues. So, Pete, man, I hate not being so indecisive. I wish I had more conviction on this for you. Right now, I just don't know what to do with it. And that's okay. You know, we got to know, pick and choose our battles and know where we're going to get the most for our money. This is a formation that may be in play. In fact, it caught the lower parallel here with some pretty damn accuracy. But what do you do here? Aside from look for a setback into the weekly or monthly open, as a possible area of reentry on the long side is down here now. It's like 105.16. And a little bit more in the near-term approach in the advance off the lows also may highlight something interesting. Okay, we know that 618, but guess what? Stop traffic. Look at this confluence here. That's pretty big. One spot, 0740. Maybe an easy 100% extension off the low. Depending on when it happens, actually converges on price action today. But if we do get a setback first, near the lower parallel or near the weekly, monthly opens, that might be the onset to get you that rally into that key region. Okay. Longer story short is I definitely don't want to be short on a long term for Euro, not from these levels. With the same respect, you need to get a little bit more of a concerted pullback towards support here to get long. So, Pete, I hope that helps, man. Take it for what it's worth. I'm always going to give you my opinion, but I just personally I don't see a setup per se. I have a bias. I like it higher, but how you trade it from here, I don't really know. He says, no problem. Worried may have missed the move. Hope it drops to get another shot. Always remember, the worst thing we want to do, Pete, is to try to get into a position because we think we're missing it. That typically is a sign that you're chasing right off the bat, and that's the last thing we want to do. All right, so some food for thought there. Thanks for the class, for the levels, for your just don't get are the best. I just don't get it. It's the best. I'm always going to call it the way I see it, Eileen. Guys, I want to wish everyone here an awesome weekend. I will see you all bright and early on Tuesday morning. Monday is President's Day, or Martin Luther King Day in the United States, so you're going to see markets closed. I doubt that we'll have anything really useful to do on Sunday, so you might not see an update on Sunday night. We'll kick things back up on Monday night on the back of the break here in New York. Guys, best of luck trading. I'll see you next week. Cheers.